Hey, folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This weekend technical analysis video is for Monday, April 30th through Friday, May 4th, 2012, and is brought to you by Realtic. All right, let's get right into this, folks. I want to discuss a lot today in this weekend video, get you guys all prepared for next week. What are the big trades that are going to be occurring next week? How do we profit from them ultimately? Where is this market going to head? And these are the key questions I hope to answer by the end of this video. First off, let's look back at last week. Number one, you started the week on shaky ground. As you can see, the 23rd of April right here, we had a gap down on Monday. This was leading into the Apple earnings release, which is really where the markets made a shift. You had Apple releasing earnings Tuesday after the close, and then you had the Federal Reserve FOMC policy statement on Wednesday midday. And that's really where the market went from being skittish to bullish again, and you had a monster rally the rest of the week. And again, Monday we had a gap down. You came off those lows a little bit. Tuesday turned out to be basically a flat day. Apple reported earnings. The gap up on Wednesday ensued. The Federal Reserve kept it going into Thursday and into Friday. Now, Friday was mostly a flat day, and in all fairness, the gains from last week were substantial. I mean, if you take Monday's lows at 136 on the SPY, and remember, the SPY mirrors the S&P 500, so essentially we're looking at the markets here. But this low of 136 on Monday to the high on Friday, which was right around the 140.80, 141 area. I mean, that's a huge move. That's about 4%. So you're talking about lows to the highs of the week, a 4% move in the markets. So you could see by Friday afternoon into the end of the day, it looked to me like people were starting to take a little bit of profit, especially when you're going into a weekend where Europe is still a major concern. And I'd say that's the big thing. Economic news in the U.S. has started to falter. We saw jobless claims this past week go up a little bit. But bottom line is, I mean, the Apple earnings really sued things over. The Federal Reserve and Ben Bernanke have basically said, and they said this on Wednesday in the press conference that Bernanke gave, they said we're willing to do anything if we need to. Now, it doesn't mean QE3 is definitely coming, but what they're saying is they're backstopping the market. All right, if things falter and we start to see this market collapse, they're going to come in and falter and kind of come in and scoop things up and put some QE3 in the market. So the markets aren't as worried about here domestically. It's still about Europe. All right, in Europe, again, you have these yields in Spain rising. You have Italian issues. You have Ireland, Portugal, Spain, and so forth. The countries in Europe are still a mess. And you have the whole election with Sarkozy, which I believe the next runoff election between the Socialist Party opposite Sarkozy, who actually won the initial election. Now they have that runoff with just the two of them. I think it's Holland is the name of the guy there. But in any case, bottom line is that's something that has to be monitored because this guy who's opposing Sarkozy in France is not pro austerity measures. He's not pro doing whatever it takes and cutting back and so forth. He's more pro, in some ways, leaving the euro and just going away. So, I mean, if he were to win the elections, you could see some major ripple effects. And I believe that's the second week in May coming up. I believe that's coming up towards the end of this week, coming week, and into next week. So there are some major rumbles there we have to be paying attention to. And I think that's going to keep the market somewhat skittish. I mean, you had a great bounce this past week. If we go to the 60-minute chart, you can really see the enormity of the bounce here, where you shot up. But I do want to point something out. You still have, and this is where we get into the technical layout of the market and kind of projections, because even though we've had a great move in the market and you have a lot of bulls jumping back on the bandwagon, you still have to be aware that you're inside. The whole move up that we had last week, and even any of these other moves, you're still inside of this initial move down, which started in late March into early April. So you had this initial fall from about 142 and change all the way down to about the 135, 136 area, which we double bottomed at right here this past week on Monday. But since then, even this upward move is still inside. It's still inside. And when we see an inside move, oftentimes it can be just a consolidation in spirit of bearish pattern prior to another leg down. And that would be my main concern in terms of looking at this chart, that until you take out this high, and I'm just talking statistically, folks, in terms of technical analysis, until you take out this high here, you have to be on alert that there could be further selling. Now, if you're able to take this out and confirm above, and confirmation is a proprietary technique here at InTheMoneyStocks.com, but if you confirm above, then it opens the market up for another leg up. But until then, you have to be on alert that this could just be a sideways move here and now an inside bar move up inside of this bigger move down. And again, interestingly enough, I mean, you can do this right here. You take this pivot high and connect it through. I mean, look at this. I mean, it's eerie how connected in the symmetry of the charts, where just by connecting the previous bounce highs, you actually get that. And again, here's your initial move down. Take the first bounce, the second bounce high, connect those, and you actually get the bounce from Friday, which actually tells us that you're probably near a resistance level up here. And yeah, I would love, personally, I'd love to see a gap up on Monday. I don't know what we'll do, but a gap up on Monday would probably enable me to pick up a few short plays on the market or on individual stocks, and I'll throw out some later in the video to kind of give you guys an idea. But the theory is this. I mean, think about this as a theory in terms of what I'm saying. All right, let's say you short right here on a gap up. So, I mean, you just have a small gap on Monday and you short it. Well, how do you know where the discipline is? I mean, what's the discipline to get out of that trade if it's not working? And whenever you're a trader or investor, you need to know as soon as possible that it's not working out. So what I do as a trader, I always look at my negatives first and then my positives. And by looking at the negatives first, you analyze, is the risk of this trade worth the reward? Most amateurs and retail investors will always look at and say, well, oh, I can make $1 million, so of course it's worth it no matter what the risk. Wrong. You have to look at it objectively using the methodology here at InTheMoneyStocks.com. And by the way, before I tell you this right now, 7-day free trial. That's all you need to know. InTheMoneyStocks.com, 7-day free trial to the Research Center for swing traders, to the Intra Day Stock Chat for day traders. And that's where you fall into. If you're a swing trader, investor, 401k person, Research Center is for you. 7-day free trial. You try it out. You don't like it. You cancel. No big deal. You're going to make money with it, frankly, so you'll probably be with us for life like everyone else, but that's besides the point. You try it out. You see if you like it. It's at InTheMoneyStocks.com, the Research Center 7-day free trial. Okay, bottom line is, this is how you analyze risk-reward. Well, where's your exit strategy? If you short right here, let's say, you know you have to get out. If you take out and close above these highs, you just cut your loss for a tiny loss. I mean, that's the beauty of it here, folks. I mean, this is all you're risking right here, which is essentially, let's say we gap up to 141. So you're basically risking $1.20 on the SPY with the possibility of seeing this as a bear flag in spirit of play out at least down to triple bottom here and probably lower, which is ultimately a $4 to $5 move down minimally on the market. Do you guys see what I'm saying here? So again, in terms of risk reward, you're risking $1.20 to make just a move down here to triple bottom would be basically a $5 move from 141 short down to 136. Now, ultimately, what you would do is if you get back here, you would take half off the table to protect yourself. You'd put a break-even stop in to protect your second half, and you'd let it run. And ultimately, if you go to your daily chart, I think you could not only get down to this area, but ultimately come down to this area here at 134, which would be your next resistance. And now we're looking at the daily chart of the SPY. All right, so do you guys see what I'm getting at here? It's about applying risk-reward to your trading, understanding the technical chart patterns. So the technical chart patterns, as long as we don't take out this pivot high here on the daily, are still bearish. In addition, your stop is very tiny compared to your reward, so risk reward is in your favor. You got the pattern in your favor, and that's how you trade. That's every trade you do should be an analysis first of risk, then of reward, analyzing price, pattern, and time. We'll teach you that here in themoneystocks.com. And I have trades that will be going out tonight for the Research Center to set us up for this week, where we'll be taking advantage of this type of stuff. All right, I'll show you one or two going into the day, but I mean, ultimately, we are going to set you up. And I just want to show you some things, guys. Based on our analysis last week, we had long trades out. Now, we had been pretty much short the last few weeks as this market was getting pounded, and we were making money, taking half off, break-even stop, doing this, doing that, profiting beautifully, and so forth. But Nick and I, my partner, Chief Market Strategist Nick Santiago, and I both saw there was a decent chance of a bounce starting around midweek. So what we ended up doing was putting out longs on Sears Holdings. Why? Because you came right, and this is just sweet, guys. Analysis showed us this was support right here. So that's a long play. Sure enough, I already took half off my Sears position for $2.20. $2.20 already, just in a few days. We profited by going long right here. All right. In addition, the beauty of it is we had Starbucks on the short side. I read it correctly. I held half my position. After taking half off for profits, I held half into earnings. Bam, down $3.23. So we had a long profit there and a short profit now. And if you read the charts correctly, you can profit on either side of the market. All right, other charts. ConocoPhillips. My partner, Nick, long play right out here. 200 moving average, in the money. Beautiful bounce. See that bounce already? Reversal candle, beautiful technical reversal candle right there. All right, there are other plays out there. Last week, I gave out AUY. Look at the bounce off the bottoming tail. We saw this bottoming tail. That's a long play. Bam. Where did we sell? right into the 20 moving average. More profits. SLW, another one. Why do we buy it? Because it was telling us technically to buy it. Look at that. So you can see that I'm not a bull nor a bear. Anyone who's a bull or a bear is going to be wrong half the time. What you need to do is you need to read the chart patterns and profit from them in no matter which direction. And if a chart pattern, if you read it correctly, it will tell you which way it's going. And that's my job. My job is to tell you guys in the research center, give you swing trade alerts, and also I teach you guys. My point is to teach the masses. I want everyone who's willing to learn this stuff because it will change your outlook. It will change the way you see the market. It will blow your mind and make you a profitable swing trader, day trader, investor for the rest of your life and make your life a lot easier, frankly, with plenty of money in your pocket. Okay? Now, going into this week, let's discuss, all right? Well, let's talk about some trades. One trade that I'm looking at here, folks, which I love, if by chance we get a gap up here on IBM is a dead-on short. All right? I have a level right here. This is a beautiful gap fill at 209.35 to 45 area right here. That's a dead-on short. Okay? So, again, a gap up on IBM, short it, in my opinion. I'm only going to give you one more. Let's take a look at JP Morgan. We'll see if there's anything. I'm just going to go through random charts. We'll give you one more to look for this week. JP Morgan traded up into the 20, pulled back. No good trade here. Why is there no good trade? Well, you have a bearish pattern here, but risk reward. Let's do analysis of risk reward. Your reward is only technically to your 50 moving average where you first realize there's support, and your risk is really right back up to your 20. So it's basically 50-50. That's not good enough risk reward. Remember in the spiders I pointed out, you had a tiny risk to a large drop reward. That's why it makes sense when you have the pattern in your favor. Yeah, there's a bearish pattern here, but you can only guarantee that you're moving down to that 50 if it falls. All right, many traders, amateur traders, retail traders, what do? Oh, well, JP Morgan can fall all the way down here, so that, no. If you're a good trader, you never go with the larger turn. You never go with a larger drop. You always have to take the smallest one. And if the smallest one still makes sense, then you take the trade. Amateurs let greed and fear rule them. Emotion is the devil in this game, folks. You go by emotion, you lose money every time. You go by technicals and the proprietary methodology here at InTheMoneyStocks.com, you make money 9 out of 10 times, 8 out of 10 times. You will do it, and you'll know where to cut your loss. And that's the sweet thing about it. All right, let's take a look at a couple other stocks here. How's Chevron doing? Chevron basically fat. Chevron had a big bounce here. Overall, risk, if it closed above the 50, that would be your exit strategy if you shorted right here. Downside actually is not bad. Downside first support would be here. So it's not bad risk reward. You can look for that as a possibility. All right. Now, if it gaps above the 50, I wouldn't take the short. All right. If it gaps up above the 50, this is your next target. So again, if it opens on Monday above here, you avoid it. If it opens somewhere flat or slightly higher underneath here, you can short it with a downside target of here. And again, any close above, you stop out very quickly. Any close on daily above. If it gaps above here, you wait for this level and you short that level. All right. Now, I'm going to be putting out more swing trade alerts tonight inside the research center to get ready for this week. We're going to be rocking and rolling. More profits to come this week. Last week was an awesome week. We're going to do it again this week. So be ready. Come take the 7-day free trial here at InTheMoneyStocks.com. Remember, research center is what swing traders and investors want to do, because we will teach you the methodology to read every single chart out there. I don't care what you trade. We'll tell you how to read it, and we'll give you swing trade alerts. We'll give you guidance on the markets, calls, and so forth. If you're a day trader, then you take the 7-day free trial to the Intra Day Stock Chat. We'll give you live play-by-play market action, trading action, and also you'll see my charts live. You'll ask questions live. It's an awesome system, folks. Have a great rest of the weekend. I'm ready to rock and roll and profit again this week. Take care, guys.